Hello, LinkedIn. I'm Susan Saravo, and I'm joined by Bob Buchanan. And Bob is he heads up our business transition planning here at Comerica. Welcome, Bob.
Thanks, Susan. It's great to be here.
Great to have you here. Today, we're talking about choosing an investment banker. And we have touched on this subject before when we're talking about business transition planning. But today's the first time that we're going to go in depth on choosing an investment banker and what business owners need to know. So let's get started with important considerations. Tell us what the important considerations are.
Sure. When you start to think about what you're doing with your business, timing is always one of the top considerations. And it's not just um, timing about when your business is most valuable, it's personal timing. Understanding what your goals really are, understanding the benefits of hiring an investment banker, and really digging into the process and knowing what you're getting into before you start are three, four very important considerations to begin with.
Goals, benefits. Those are all excellent. So let's talk first about a little bit more in depth on timing. We have a slide that we're going to put up for that. And then after that, we're going to talk about business cycle and personal life cycle, because that's a really important balance there.
It is, and that's what timing is really all about. Is are you personally ready? Are you at a point in your life when you know that you're ready to exit your business? And there are a lot of considerations that go into that. There are financial considerations. Are you financially ready? There are market considerations. Is the market ready to buy your business? Is it a good time in the market? And in your personal life, have you reached a point where you know what you're going to do tomorrow, where you know you have what you need and you've fulfilled your goals? And so I love this slide with the personal life cycle and business life cycle. And it's interesting when I talk to business owners, they seem to think that they're going to time their exit as their personal life cycle is peaking and as their business is peaking. And that's almost impossible to do. You're almost never ready personally when your business is at the best possible point and when the market is at the best possible point. And so understanding where you are on that graph is great to do, and understanding how those things interact with one another. And so if you're at the place in your personal life where you're ready and your business is not its most valuable or not at the point where it's going to be easiest to transfer, that's okay, as long as you understand what you're giving up by going or waiting. What's not okay is making the decision without understanding the interplay between where you are and where your business is.
And Bob, a big part of that is understanding the financial requirement before you make this decision and start to make these moves. So tell us more about the financial requirement.
Yeah, and I use this slide in a lot of these presentations. So the circle represents everything that you need to live the rest of your life financially. And the blue part is what you already have, and the red part is what you still need. And often the biggest asset that you own is your company. And that company is illiquid. It's all your value is still tied up in that business. And so when you think about what it is you're going to need to live the rest of your life the way you want to live it and accomplish all of your goals, you break that down into what you have and what you don't have. And if what you don't have is part of your business, then you have to think about how you're going to extract that from the business. Are you going to do that from ongoing proceeds, running the business for a longer period of time? Are you going to do that from proceeds from sale, or some combination of the two? And understanding what that value is and what that cash flow looks like is probably the most important thing you can do along this journey to make sure that you have what you need going forward. Because if you don't, then selling your business may not be the best thing to do.
Well, Bob, we know that business owners are used to risk. It's just part of owning a business is really understanding what the risk is. But there's also risk in when you're determining how you're going to transition out of your business. So let's talk a little bit more about risk concentration.
Yeah, and when I said a minute ago, your business is probably your biggest asset, for most business owners, that is absolutely the case. It is their by far largest asset in their portfolio, but they don't think about it as an asset in their portfolio. What they do is they look at that light blue circle, the portfolio on the left, and they say, that's my portfolio. And somebody's watching that for me all day long. There's stocks and bonds and maybe real estate and maybe cash and some other investments. And that's not intended to be an exact proportion portfolio. That's just sort of a typical what it might look like. When you look at a business owner, often 80% or more of their assets are tied up in that business. And their real portfolio is that whole big blue circle with that light blue circle fitting into a tiny section of it. And so when they think about how they have taken risk over the years, they don't really put it into this kind of a framework. And putting it into this framework is helpful because they need to understand that the part of their portfolio, their true portfolio that represents their business is going to change. And when it changes, there'll be less risk because they'll be investing that most likely in a more diversified portfolio, one that looks like the one on the left. But with less risk comes less return. And so understanding what that value is and how that's going to be reinvested and what you're going to do with that and the cash flow that comes from that and whether or not they can live on that cash is, again, sort of the crux of that decision-making process.
Okay. Well, thanks for outlining those steps so far, Bob. Now we're going to get into more specifics about choosing an investment banker. And you have identified 6 steps that business owners need to follow. And it keeps it very simple, like everything you need to know to follow the 6 steps. So we're going to go ahead and start here. And I wanted to mention for those of you watching us on LinkedIn, thank you for joining us live here. If you have any questions for Bob, go ahead and type them in the comments and we'll take a look at those after we go through the steps. All right, Bob. So let's start with the first step, and that is understand the role of an investment banker.
Right. And so a lot of people hear the term investment banker and they don't really know what that means. So an investment banker, first and foremost, is a transaction-oriented financial professional. They help business owners in large financial transactions. And sometimes that means selling a company. Sometimes that means raising capital. Sometimes that means buying another company. In this case, we're talking really about a sell side investment banker, which means they're going to sell your business for you, or they're going to help you sell your business. They provide expertise that you don't have. And for most business owners, they're very good at running their companies, or their companies wouldn't be valuable to begin with. They spent most of their lives running their businesses. But when they get to the point of wanting to sell it, this is a one-time opportunity. There are people out there who are serial entrepreneurs and they buy and sell companies all the time. But for most business owners, they have one shot at selling their company and they really need the expertise of someone who's done it before. If they try to do that on their own, they will invariably make mistakes that they regret later. And so a business owner, when thinking about what they want from an investment banker, and we'll talk about that in a minute, needs to know, first of all, what an investment banker is and what they do. And a strong investment banker will bring a wealth of experience in managing details of a transaction. They'll do research and data analysis. They'll do marketing of your business. They'll do documentation. They will create a process to find buyers. They will identify buyers. They will bring buyers to you. They will manage that entire process, both verbal communication and written communication. They will store documents. They will manage the process of introducing you to potential buyers. It's an incredibly inclusive process that investment bankers run, and it's soup to nuts, as they say. They'll close the transaction for you. They'll negotiate it. They'll get everything done right up to the point of putting the wire in your account.
Okay. And that can alleviate a lot of stress for folks who are trying to sell their business. So thanks for mentioning all of that, Bob. Okay, now we're going to talk more about.
Susan,
go ahead.
Before we move on, I want to say that's one of the most important things is that the investment banker takes it off of your plate so that you can do what you do best. You can continue to run the company, because the last thing you want is to be distracted and have your company falter during a process of selling it. That's not good for the company and it's not good for you.
Right. You want to finish strong, as they say. Okay, so let's talk more now about identifying your needs as the business owner, and you're starting to work with an investment banker, really knowing what your needs are so that you can communicate that to your new banker as well.
Exactly. And it's identifying your needs starts with what is it do you want to do? Do you want to sell your business and leave? Do you want to sell your business and stay in it? Do you want to sell part of your business? Do you want to raise capital and expand your business? I mean, we're really focused on selling today, but maybe that's not where you are. Maybe you want to bring in a partner and raise capital and grow your business. And investment bankers can help you do that. Maybe you want to buy another business. Investment bankers can help you do that. So transaction type is important because there are investment bankers who specialize in different types of transactions. Industry specific needs. Sometimes you could be in an industry where industry expertise is incredibly important, and other times maybe not as important. But recognizing where you are, whether your industry has a very tight niche of buyers and sellers, a very tight group of people that might be interested is important. Or if you in a business that's maybe more valuable to a much broader audience, it's helpful to understand that. Finally, culture and values. I put that last, but it's probably the most important thing is knowing who you want to work with, what kind of person you want to work with, making sure that you've identified those values that your business was built on and the culture that you've created, and hiring an investment banker, finding an investment banker, looking for an investment banker that matches that culture and those values. The last thing you want is to jump into a transaction with somebody who you don't trust and who doesn't fit the business that you've built over time. You want them to understand you and understand your business and understand exactly what you're trying to achieve.
Bob, you also mentioned that the business owner has some of their own homework to do in this process. So tell us more about that for step number 3.
So when you're looking for investment bankers, there's lots of information out there, and you can jump on Google and Google investment banker. More likely, it's better to ask trusted advisors. Talk to your attorneys, talk to your accountants, talk to your bankers, talk to trusted peers, people in your industry, other business owners that you know, whether they're in your industry or not, who've gone through a similar process. Do online research. For me, the absolute minimum requirement is that an investment bank is licensed through FINRA and that the bankers themselves are licensed through FINRA. And look at that's important. I don't want to skip over that. The reason that's important is that if they are, you know that there is a minimum level of expertise, that they have received training, they have the expertise to pass some tests, that they know what they're doing. There's also ongoing oversight from FINRA. And so you have an investment banker that you're hiring. Again, you're trusting your largest asset to someone to go into the market and sell it. You want to make sure that they're a professional, and that not only are they professional, but they're experienced and that they're educated and they have the expertise they need. When you're doing online research, you can look at these investment banks and you can see how big they are. Maybe you want a very large investment bank. Maybe you want a very small investment bank or something in the middle. So size matters. Tombstones, that's a history of the transactions they've done, and they'll typically post those online. So you can see what kinds of deals they've done in the past. You can also look to see if there have been complaints filed about them. And while you're doing this homework, you can start to narrow the list. You can start to say, I don't want to work with somebody who's never done anything in my industry, or I don't want to work with a bank that has 1,000 advisors. I'm more comfortable with an investment bank that has 25 advisors. I want to work with somebody who is only focused on my industry. You can find all of that out by doing this sort of basic homework. And then when you ask your peers who they've used, you can also ask things like, what did you like about them? What did you not like about them? Those are the kinds of questions and answers that will start to drive your decision-making process.
And Bob, this is time for the business owner, for you to be choosy, right? right, for you to look at all of these different investment bankers and decide which is going to be right for you, regardless of who you know, who's gone with whoever, to not feel pressured to go with any particular investment banker, but go with the one that you think is going to best serve you.
That's right. And starting with a large funnel and narrowing that down is an important process. Don't say, "Oh, my friend told me they used this team and they were great," and that's all you do. You really need to go through a comparative process.
Okay, so once you've done all your online research and you have a list of folks that you're thinking about talking to, then you say the next step is to do some interviews. So you need to be meeting people and having some conversations and have an opportunity to ask your questions, right? Tell us more about interviews.
Yeah, and so when you're interviewing these investment banks and the bankers, it's important to understand what your team will look like, who specifically will be on your team, and what their expertise is, and what expertise each member brings to the process. Ask about the process itself. What do they expect? What are the timing expectations? What are benchmarks along the way? What are the things they're going to do for you, and how are they going to do them? Ask about valuation expectations. Investment banks will come to you for no charge as part of their marketing effort to you and tell you what they think your company is worth. And they might tell you how many buyers they think are out there. Ask those questions. It's really important also to understand what their expectations of you are. And so don't get into a process where they're going to be leaning so heavily on you that you can't run the business. The point of having an investment banker in the first place is that they're going to take the heavy lifting off of your shoulders and they're going to do this work so that you can run the business. Talk to them about fees and talk to them about how they structure their fees. Get a feel for how it's going to be to work with them on a daily basis. These are people that are going to be a huge part of your life for 3, 6, 9, 12 months. An investment banking process doesn't happen overnight. There's a lot to do and it's very involved. And you really need to understand what it's going to be like to work with them. Going back to that culture and values, understand how you're going to fit with them on a daily basis, how they're going to work with people on your team, on your staff, and whether they're going to have, tremendous demands on those people or those demands are going to be lighter. All of these things are going to start to affect how you think about the process you want to run and who's going to run that process for you.
Okay. Bob, we have a few questions in the chat here that are related to these last two slides that we're talking about. So I'm going to go ahead and ask you these. Number one is, how do I find an investment banker? And then the second one is, how do you know which one to choose? Which you touched on that a little bit. But a second part of this question is if their cost is fair and competitive. So let's tackle the first question too about how do you find, you mentioned you do your own Google searches, you talk to people. Any other ideas for how to go about finding the right investment banker for your business?
Well, yeah, those are the key steps, but you can always also look into the marketplace and see what companies that are like yours have sold, whether it's size or industry or geography. And oftentimes you can Google that sale and you'll find an article that says they were represented by XYZ.
Okay.
How to choose one? I mean, that's really what we're talking about, right? How do we know we're choosing the right one? And it's all about all of these different factors. You can't choose one based on a single factor. You probably just won't be happy at the end of the day. Mm-hmm. And understanding whether or not their pricing is competitive, you're narrowing the list, and you're going to, I think in the next slide or the one after that, you're going to be comparing pricing. And
okay.
we can know what market pricing is because they're all going to come back with something that's similar. And if there's one that says I'm going to charge 6% of the transaction and all the others say 2%, then that one is out of market. And so it'll be fairly straightforward when you look at their proposals, but that's in a later step.
Okay. Well, actually, that brings us to our next step, which is evaluate proposals. So let's move on to that. Would be step 5. We have that slide on, and how once you've done your interviews, you receive the proposals, you're looking through them. What do you need to do to evaluate the proposals?
So I think there are a lot of things to look at in evaluating a proposal, and there's help for you in doing this, right? You can call other people to walk through that who've done it before, but proposals are usually structured in fairly similar manners. Some investment banks ask for a retainer up front. Some don't. Some of those that ask for it up front will credit it back against the success fee. You want to know what the success fee is. This is typically a percentage of the total value transferred or sales price. Those success fees can range pretty dramatically and can have what are called breakpoints. So maybe it's a certain percentage up to X dollars, and anything over that, it's a different percentage. One of the things you're trying to make sure is that your investment bankers are aligned with your interests. So you get, the more that they make. And you want them working on your behalf this entire time. How are they going to handle expenses? And are there caps on expenses? Are you going to have to pay for all kinds of travel for the investment bankers? And will they cap that for you? What strategy are they going to use to market your company? Again, what's the timing of that, expected timing, and what are benchmarks? There's a term called the tail, and that means if for some reason you decide to terminate an engagement, or the engagement just isn't successful over a certain period of time, typically an investment bank will have what's called a tail. So that if you terminate an engagement after, say, month 3, and then you go out and you sell your company in month 6, you're still going to have to pay them. And that tail could be a year, it could be 18 months, it could be 6 months. But they will all typically have a tail. So you want to compare the tails. Again, alignment. You want to make sure that whatever proposal is in front of you aligns their interests with your interests, particularly economically. And so when you have them all set out in front of you, you can make a quick little chart. And here's the retainer on 1, 2, and 3, and here's the success fee on 1, 2, and 3. And then imagine different sales prices and look at what those total fees would be under those different scenarios. That's a great way to start evaluating proposals. But another great way is to take the proposal to some trusted advisors who've done it in the past. Take it to your attorney and your accountant and other people who've gone through this process with other clients of theirs, and they'll help you evaluate those proposals.
Okay. Bob, we have slide 6 that we want to put up, that it talks about finalizing your decisions. So you've gone through all these steps and you're ready to make that final decision.
Right. And keeping in mind that this is likely the largest financial transaction of your life, the largest financial decision of your life, you need to make sure that you've prioritized those goals like we talked about at the beginning. Review and compare those proposals. Make sure there's alignment of interests. Talk to advisors. And importantly, trust your instincts. If you're talking with 2 investment banks and one you feel very comfortable with, even if they're a little expensive, and the other you don't feel so comfortable with, but they're a little less expensive, think about what's going to happen over the next 6, 9, 12 months and trust your gut, trust your instincts. Go with who you feel most comfortable with who has demonstrated that they are aligned with you, that their goals and their values are the same as yours, that their goals are to make you in a better place at the end of the day. And if at the end of the day you're not comfortable with anyone, you can start over. There's no need to jump into a boat that you're not comfortable getting into. And I think that's an important part of understanding that this is your company, that this is your business that you've built. It probably feels like family to you. You wouldn't put your family in a doctor's office with a doctor you weren't comfortable with. You wouldn't put your company into the hands of an investment banker you're not comfortable with.
Well, Bob, I'm glad that you mentioned it's okay to start over, because I'm sure a lot of business owners might think, well, I have this, the sunk cost situation that I've already put this much time and money and effort, and to back off and start again, that's a tough decision to make.
It is, but it sometimes it's the right decision. I mean, I understand you've got time in this, but think about the result and how you're going to feel in 9 months if you going through with someone that you're not comfortable with, and at the end of the day you don't get what you want or what you thought you were getting. I think it's a lot better to invest that time up front and make sure that you're moving forward in a way that's productive for you.
Okay. All right. Before we get to final thoughts, let's take a few questions from our audience here. And one question is, how important is exact industry experience when hiring an investment banker?
So I think industry experience is important, but I don't think it's the overriding most important factor in hiring an investment banker. Um, Oftentimes, unless you're in an industry that is so specific that you have to already have relationships with the players in the industry to have a deal done, I think it's a secondary issue. It's important that you have experienced investment bankers. It's important that you have investment bankers you trust. It's important that you have investment bankers whose goals are aligned with yours. Industry experience is nice, but it's a one of the factors you should consider. If you have two equally qualified investment bankers standing next to each other, one of whom has industry experience and the other doesn't, and otherwise you trust them the same, their goals are aligned the same, then choose the one with more industry experience. But I don't think that industry experience, again, is overriding. And keep in mind that if you have someone who only works in a single industry, they're going to have a lot of relationships in that industry with buyers. And your transaction is a single transaction for them, but those buyers might be multiple transactions for them. And so you have to kind of consider where their allegiances lie as you move forward, because if your deal is one that is a blip in time, but they've sold 20 companies to a specific buyer, maybe they have a great relationship with that buyer, but other investment bankers can bring that same buyer to the table. You don't want to get into a situation where they are beholden to a buyer because all of their fees come from selling to the same buyer.
Okay, well, more reasons to do your homework before you
Yeah.
decide on that investment banker. Okay, I want to sell my business when its value is at its highest. How do I know when that is? I know you mentioned this earlier. You want to have personally, it's the perfect time, and your business is at its highest, but that rarely occurs. We've established that. But are there situations where people do time it right in terms of when their business is at its highest value?
Oh, yeah, absolutely. There's situations where people time it right. It's really hard to know when your business is at its highest value. Things change so quickly in the market. Really, the biggest determinant of the value of your business, what you're doing internally and your business's performance obviously affects value, but it's really a marketplace driven function. And so knowing when your business is worth the most is almost impossible. Tracking value over time. I mean, I used to be in the valuation business, and we would do valuations for people on an annual basis, and you could see trends. And whether it was the most valuable or not, I can tell you because we didn't do the next year, but we could say it's more valuable than it's been before. Also, investment bankers will bring a lot of data to you right up front, and they'll tell you where the market is. They'll tell you how market multiples have changed over time and where they are now and how they're trending. And if they come to you and say the market has, doubled over the last 5 years, it used to be 6 times EBITDA and now it's 12 times EBITDA, and we see things in the market that lead us to believe that it's leveling out or maybe going to pull back, maybe that's the best time. But if you have an investment banker that you trust and they're talking to you over time, remember, they'll talk to you for a long time before you hire them. They want your business and they want to help you. And so they'll provide you all kinds of information so that when you're actually ready to pull the trigger, they're the ones you call. And so they can help over time understand value trends. No one can ever tell you this is the highest your company will ever be worth.
Okay, so that's good to mention that you should hire the investment banker on your timeline because they'll be there when you're
Absolutely.
ready. Okay.
Absolutely.
Okay, another question here. Can you please outline the capabilities Comerica can offer business owners for sell buy side transactions?
Sure. So Comerica has an investment banking team that focuses on privately held companies, mostly on sell side transactions. And so that team has industry expertise across various industries, lots of transaction expertise, which is, again, in my mind, the more important piece. Industry is important, but it's the transaction piece that's really what you're looking for. And we can, that team, that investment banking team at Comerica can take you soup to nuts, from the very beginning of talking to you about what you're trying to achieve to negotiating and closing a transaction and everything in between, just like all of the things that we just talked about.
Okay. All right, Bob. So let's go to our final, well, we have two final slides. One is final thoughts and then key takeaways. So let's talk about final
Yeah.
thoughts here.
So final thoughts is this is just sort of a conglomeration of all the things that came before. Identify your goals, be prepared, make sure that you're prepared personally and financially for this transaction. Do your research, understand who you're talking to and what they can do for you. And keep in mind that it's okay to start over. This is your biggest financial event, selling your company, and it's probably one of the biggest emotional events of your life as well. You can't take it back once it's done.
Okay. And then our last slide, we have our key takeaways.
Yeah, so key takeaways. Trust is the number one takeaway. Make sure you're working with people you trust. Make sure that their values are aligned with yours. Secondly, make sure their interests are aligned with yours. You don't want someone giving you advice to sell your business because it benefits them, not because it benefits you. And finally, follow a process. Don't do this by just talking to one investment banker and saying, I really like this person, and now I'm going to hire them and move forward. Follow a process, compare different investment banks, ask for help in that process. There's a lot of people who can help you, including people at Comerica.
Okay. So for those of you who would like to review everything that Bob just said, this video will remain on LinkedIn, so you can watch it, rewatch it if you want to. And also, he has a written version of this information. And if you go into the comments section of this live stream here, you'll find a link to that, to the website. And there's also information on how to contact Bob if you're interested in talking further or having him answer some questions for you. So Bob, thank you so much for joining us today. Again, a wealth of information that you shared and really appreciate all that.
Thanks, Susan. Thanks, everybody.
Thanks, everybody.